Welcome to StockOdds Odds and Ends with Dave Singh and Rob Friesen. Good evening, Rob. How's everything?
Hey, how's it going out there?
Well, I lost my voice, but I'm still here ready to help you get ready for the week.
Well, that's good. Frog in your throat. I appreciate you're on board here with that, but
But we still must trade, right?
well, I mean, we're coming up to the last trading day of January on Monday here.
Yeah.
And
So we had a huge kind of rally towards the end of Friday there.
oh, I know.
Yeah.
I mean, you know what's interesting is all of the groups that just sort of turned green on Friday. I mean, literally the last 2 hours of the day, right?
Mm-hmm.
And quite substantial rally, which judging by end of the month seasonality, wasn't supposed to be super terrible, and we were down, coming into this quite a bit. So expected a potential of a little bounce, and we got a pretty good one. Apple, sure did a lot of good for the market there with its earnings and lifted all kinds of stocks. Now, not everything. I mean, Intel was still down on Friday. Netflix was still down on Friday. In the oil complex, which has been doing pretty good and looking like it could still do okay, Chevron was down a lot. Conoco was down a bit. Visa had a phenomenal day, up over 10%, and yeah, that lifted MasterCard up 9%, PayPal, American Express all up. So quite a broad-based rally. As far as the groups go, just in terms of capitalization, mega cap was 3.26%. So it kind of led the charge. Then mid cap, then small, and large was in fourth place. On the sectors, we had technology up the most, 3.67%. Real estate next, communication services, consumer cyclical, healthcare, financial. Utilities was down the list there, still up 1.17. And basic materials was down for Friday, as well as energy was down. So the question is whether, the markets are going to stay on a positive note, entering into tomorrow. So we have the futures currently. The Dow's up slightly. Everything's pretty close to break even. Nasdaq's up the most of the three bigger ones, and then Russell's down. Yeah. Like what do you see? 0.28% down, right?
Yeah, and even the almanac says that small caps will really underperform the spider that final day of January.
Right. Now there is a contrast here with AMC, one of the meme stocks. Obviously in the seasonality, it performed pretty well the last trading day of January, along with GME and things like that. This could be a completely different year with no resurgence of that, or you never know when some of the meme stocks come back out of the woodwork. I know Cathie Wood was buying Robinhood on Friday quite substantially, over 2 million shares. So maybe that'll put a little wind in the sail of some of these meme stocks. But I think that that ship has sailed to a large extent. I'm just always sort of watching just in case, right? But I think I think the capitalization of people in general has changed quite a bit in the last 3 or 4 months as compared to last year at this time. Why? Yeah. We've lost stimulus. Next, some firms have already moved to check people's borrowing power by reducing their credit lines, reducing their credit card total amount limit, like their limits. There's been a lot of proactive stance on behalf of financial companies, sort of against the consumer in a way, like, not sort of being as loose to the consumer. So we lost stimulus, we got tighter credit markets, and I think people are stuck in a lot of positions that are hodlers. I just think they're stuck. Things have gone down so much. So what normally happens is, things will get back maybe to where some of them purchased, and then they'll go, oh, well, I'm back to break even, or I'm almost there, and I think I'll unload, and that's why you get support and resistance levels as well, because they'll sell when they get back to break even. But I think a lot of people are stuck. What do you think?
No, and also we have higher prices, inflation, and psychological damage from just watching these growth stocks go down 50, 60%. So
sure.
I think they're going to be more gun shy with these meme stops, or they've lost their capacity to trade, period, right? You can only take bets that strong until you get blown out. And I think a lot of those traders have gotten blown out, or they're in Bitcoin and they're cut haircut in half, right? So
yeah, where I'd be more concerned about the short side of the equation, I'm not right at the moment. I'm not super concerned about being short energy, just because if you look at the damage that was done to Chevron and some of the other, like I might be okay with that. But some of these, attractive NASDAQ 100 stocks, I tend to be a little bit cautious if we're going to get a follow through to what we saw on Friday. But maybe in the industrials, it's more forgiving. 3M was down for 4.15%. So some of the industrials might be, consumer staples might be an okay place. Healthcare might be an okay place. Do you want to run? If your voice is okay, do you want to run through some of the ETFs that you see?
Yeah, I do just earlier. First off, it's the last day of the month, and in general, there's been that deleveraging on that final day, so there's a bit of pressure against the index. The spider is expected to be down 0.29%, right? So that's just on the stats. But within the groups that are there, we see things that are going to be up: gold, silver, TLT, utilities. Things that are down are financials, KRE, XLF, and even SMH. So it's kind of a risk-off tone when you look at the sectors that are expected to do well and poorly on the final day. And I looked at a couple, like financials are expected to underperform the spider. Gold is expected to outperform the spider. Chip stocks are expected to underperform. Energy expected to underperform the spider, and utilities expected to outperform vastly, right? So, and real estate as well, right? So these are kind of a risk-off tone just by the sectors that are expected to outperform. Here's one: biotech. Biotech is supposed to be positive, where the spider's negative, and the same at the IBB and XPI. Those are supposed both good ones, according to the stats.
Yeah, I mean, I'd probably add the regional banks and things. Don't have a problem being short those. The credit cards, just because they were so strong, Discovery and Capital One wasn't too bad, but I mean Visa, MasterCard, I don't know. I mean, that's such a crazy move for a Friday. There may be some follow through there. But the insurers, not the brokers as much, but the actual insurers, I would be comfortable being short those. Capital markets, Schwab was down. Morgan Stanley wasn't up that much. I'd probably be okay with capital markets short. So just trying to look through the landscape and say, where are the risks for some follow through? What potentially was up but really wasn't super strong, and that might be a good place to have your hedges, because that's all we're looking for. Is we're trying to find what are the better odds on the long side, the better groups, and what are reasonable hedges. Now ETFs, Dave mentioned a bunch of the ETFs. Some of those could be adequate hedges, and possibly a lot better for this seasonality than the individual stocks. Like if you're looking for say you wanted to take the last trading day of January and say, I want to play seasonality, I would tend to look at the credibility more of the ETFs for that versus some of the stocks that the seasonality thing is showcasing, just because when you go back to 2021 and that specifically applies to what we saw in January with all the risk on stuff, the SPACs, the meme stocks, the short squeezes. We had so many stocks that changed, by 20%, 30, 40, 50% or more. And that really impacted the seasonality of, say, the last 8 years. If you have 1 year that's off the charts, it's going to skew those averages. But in the ETF world, there wasn't as much change, right? So XRT would have been one that was impacted by some of the retailers, and IWM was somewhat as well through the AMC situation. But the other ETFs, like did XLI change that much? No. Did XLK, yeah, a little bit to some degree, XLY to some degree, just because it has a few hot stocks in there too. But but most of them are okay. So the sector ETFs could make good hedges. You could also make good relative strength trades in a sense that you can find a good short or a good long and put them together. There's lots of opportunity, but just be mindful of how things look tomorrow morning. And what groups are showcasing already strong or weak, and how does that compare to what happened last week and Friday? So if we take a weekly perspective, energy was really good except for Friday, right? So think about the week and think about the 1 day. Now, is that a big change, or was it just a 1 day pause while other, like the tech stocks, really were the ones that performed so well, and some of the the credit card services and a few of the drug makers and things like that. But overall, yeah, and energy just had a 1 day rest, right?
Yeah, and we have some earnings coming up this week too, some mega caps. So the first day of the
rattle
month,
off the earnings for the week. That'd be good.
Yeah, so first day of the month will be Tuesday, and you have Alphabet reporting on Tuesday, and then on Thursday we have Amazon. So two large mega caps, part of the FANG, so that could move the markets. And then Exxon is reporting on Tuesday as well, so that ties in with energy. And then some of the automakers, General Motors on Tuesday and Ford on Thursday. So those could be drivers of some of the sectors as well. And PayPal on Tuesday, so with financials.
Now, it is important to check whether they are pre-market or after the market, and there can be quite a performance difference, obviously. If it reports pre-market, it can impact not only that stock, but the group to some degree. And if it reports, after hours, well, then you could probably still trade it for the day if you're getting out before or at the close. So, most stocks don't report during the day. There's a few NASDAQ stocks that do, but most of the New York stocks don't report in the middle of the day, so you're usually fine. I would say that for oil, Exxon's certainly a big one to watch. They're on Tuesday, right?
Yeah.
Okay.
And Facebook on Wednesday as well.
Yeah, now called Meta, right?
Yeah, no, that's why I overlooked it. I thought, what's this Meta?
Yeah, well, that's a big one, and it certainly affects two main categories. One would be, the Qs and the XLK, but also it affects the IW. What is the
XLC, right?
XLC, sorry, yeah, XLC, which is the communications. That's it's such a large percentage of that it's going to impact it greatly. So.
Correct.
Right. Yeah, so anyway, let's just check our futures here again to see if anything's changed. Yeah, from the time that they opened, they have been kind of clawing up a little bit more. the Dow, the S&P, and the NASDAQ. And again, the Russell is the one that's down the most. Also, the VIX, really spiked on Thursday, and we rolled over a little bit on Friday, pulled back quite a bit. So, yeah, well, Wednesday, Thursday was the. So wait a minute, hold on. Wednesday was down around the 26 level, and we spiked at the peak on Friday, actually, up into the 30 again, and then pulled back in that last 2 hours of the day. So, but now we're down back to the lows from Thursday is where we are on the VIX. So it's rolling over. If things open okay tomorrow, kind of flat to a little bit up, and they start to chip away at it, then expect the VIX to fall further. Okay. I find that these levels of volatility, they don't last that long. Like we always talk about how great volatility is as a trading instrument. Traders make more money when things are more volatile, but the periods of time, they don't last that long. Volatility usually dissipates quite quickly. I still think overall it'll be elevated this year compared to what we saw maybe in most of last year up till September, and then we got a little bit bouncier. But I expect volatility to be lower and still be somewhat elevated year over year. So okay.
And Bitcoin is down 2.8%. So that lines up with this little bit of risk-off mentality too. So that's just
I'm glad you brought that up because I hadn't talked about it today yet. So, but we saw that 30,000 kind of, or 36,000, got broken and it dropped below that. There was a lot of stops sort of under that 36,000. And it's back up over that a little bit, but it is on a lower high still. The trend is down, and right now it's already down 2.91%. So it's going to possibly put a little damper on the risk appetite. It has been, important in that determination. Are we okay? Or are people going after riskier assets? Or are they being more defensive, more conservative, going into more value and lower beta stuff? So we'll keep an eye on Bitcoin tomorrow morning as well.
Very good.
All right. Well, let me see. I'm just going to take a quick look here. I'm probably favoring short on some of the financial stocks. I like the insurers short. I like some of the banks. I'm going to be looking at maybe some of the really poor performing Russell stuff as shorts as well, since the Russell's already down. I'm probably going to pick and choose with the technology stocks. I'll pick wisely both long and short. I wanted to point out one thing before we leave here. On the sectors, so technology was up the most on Friday. And then when we're looking at this sort of what happens this week as we come off of that kind of strange week and then the final rally, technology was up the most and energy was down the most. So those two ones would be the most risky to be directionally minded. Like if I said, okay, energy's rolled over, so I'm comfortable being short. But it was only one day versus the whole week. So I could be wrong on that. Technology, on the other hand, was down for most of the week and had a big rally on Friday. Okay, well, if I want to play continuation of that, I could be wrong. If I want to play fade of that, I could be wrong. So the areas that are the most forgiving would be consumer cyclical, healthcare, financials, and utilities, even consumer staples. those would be the areas that would be more forgiving. They would be less powerful in either their continuation or their reversal. Does that make sense, Dave?
Yeah.
Okay, and that's how you can choose to do. You can say, I'm going to play the middle groups, the boring, is beautiful kind of thing, rather than go into technology or into energy heavy on a directionally minded thing. If you're going to play technology, then try to be long and short within the group. If you're going to play energy, try to be long and short within the group. It's going to be much better for you than being completely directionally orientated and getting it wrong. Okay.
Sounds good. Sounds good.
All right.
All right. Good luck. Good luck.
All right. Thanks, Scott. Appreciate it. Have a good night. Get your voice all healed up. Okay.
Next week.
Okay.
Bye.
Cheers.